Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today probably we again could take a look at the euro currency on the Great British Pound and analysis that we have prepared on the weekly research. There's probably no changes still, since market is struggling with the weekly oversold and no significant changes have happened. Retracement has been triggered yet on the Great British Pound. That's why today probably we'll take a look at the euro currency. Also, guys, especially because we have some important moment, you probably already see it. This is the bearish grabber that has been formed yesterday, and this really brings new tone in the current discussion, because based on this pattern, right now is the moment where traders who trade the euro currency and who have the bearish view on the market should take the decision whether to take the short or not. If you remember what we have discussed in last time when we have taken a look at the euro currency, we said until market stands below 1 or 850 area, below 1 or 950, below this top, the downward reversal still happen. It still could happen. It has been cancelled totally, because we have this head and shoulders in place. Market hasn't quite reached the lower target, the extreme target of this pattern, but completed A, B, C, D and turned to the upside based on the Judd Napoli head and shoulders failure pattern, something of that sort. And we said, well, since we have this strong rally against us, it's probably we need some more clarity. We need to get some more signs, patterns of something that could get us some transparency and better understanding what's really going on right now and what we could expect. And right yesterday, market has formed this grabber, and by this action, it has confirmed the resistance of this area. It means that reversal down could happen, and it could happen right from this moment. That's why, but at the same time, guys, right now market keeps valid as guarded triple to buy pattern, so initial thrust, ABCD action. So we have the guarded triple to buy with the minimum target stands at right at this top, 111 even approximately. And it also keeps valid potential for the butterfly buy pattern, butterfly sell pattern. For example, if this will become the left wing, or that whole action will become the left wing, this market still stands here, it could show the extension to the upside. And that thrilling moment, the tricky moment, stands with this grabber, that its target stands right at validity point of both bullish patterns. So if euro will complete the grabber and will take it out of these lows, it simultaneously will erase as the guard is triple to buy as potential butterfly, because market will drop below the major swing low here. Also, guys, if market will drop here, it simultaneously will break last major fib support, and on the way down, so also only the phantom hope, bullish hope, will remain that market could turn up. So probably this will be gravitation to the former lows around 105. That's why this low is very important. But here, guys, the tricky moment stands that we, of course, have no guarantee that this grabber will work properly and that it will not fail. So you can see volatility is very significant right now in euro currency. Especially take a look at this candle. It's Friday. So you could drop, significant drop lower, return right back up and close right at the top. So it's really very volatile session, and market seems a bit nervous. That's why its decision will be not really quite safe. But at the same time, technically, market right now stands a behavior where you have to take the decision. Would you like to trade this on the short side or not? Of course, you have the choice as every time. So if we'll take a look at the hourly chart, I'll explain what I mean. So here we have the body of the grabber. This is the drop of the grabber. This is the grabber candle. Take a look what is going on right now. Market has formed a pattern, and now it is forming the retracement up right inside of the body. That's the particular moment where usually we make the decision of the taking the short position. We're trying to sell the rally according to the pattern. So our logical combination will be, or should be, just taking the shard, placing the stop above the stop, because this is invalidation point of the grabber, and it will stand valid until market stands below this low. Okay, we could wait, for example, not for that fib level 10904, but we could wait, for example, for 10920 with a 618 resistance where we would like to take the short. But anyway, right now we have to make the decision if we would like to trade it on the short side of the market, because we have the context for the short trading. We have the bearish trend, we have the grabber, and we have the chance that market will drop lower. Here we have to decide, would you like to take the short or not? That's your stop. Our stop will be here. That's the first approach. Speaking about the choice, you have the choice. For example, you think that it's not very safe and you are not ready right now to risk for that possible loss here, and you are not sure that market will turn down. Maybe this will be the breakout to the upside or something of that sort. Well, in this case, you could wait for a confirmation of the bearish trend. So you could wait when the grabber will be completed. In this case, market will drop below 107, and you could try to take the short after this will happen. In this case, all bullish patterns will be erased, and that will be safer from the contest purity point of view for taking the short. But your profit will be quite limited. So from that point to this low, it's really not very big range. But that will be a worse entry point, but it will be a more clear setup. It will be more confidence for taking the short position here. Here you have more risk, but your loss relatively small. It's not really significant loss, approximately 40 pips here. And you will get the better entry point. Yes, some risk exists that market will just continue move higher. This could happen, especially taking in consideration this most recent rally. But this is, we meet this combination every time when we make the decision on the trading. Every time exists the risk. The major point here is to not make the mistakes. What mistake is? Mistake is when you trade market against the context. When you have the bullish context, but you trade it on the bearish side of the market. But here, we do not have the bullish context. We have the bearish trend, we do not have the bullish directional patterns, and we have the grabber pattern that tells that market could drop lower. Besides, taking into consideration the potential risks, that it's really not very significant. So, in general, the situation, I think that's worth our attention, and it's worth it to think about possible taking position or not. Or at least we could, for example, reduce our trading volume twice. So we could take just half of the position. And when the market will turn down, maybe we will add a bit more if it will drop lower below these lows and will continue to move lower. So that's also another possibility. So you can see it's a lot of scenarios how you could manage your position. It's depending on your risk management and your trading style. So, but that's in short our view on the euro currency, because we think that in short-term perspective currently is the moment where you just have to decide, would you like to take the short here or not.